I regard silver as more a tactical than a strategic commodity. And my gut feeling is if you're going to go down that road, probably rather than buy the silver and accept the volatility in silver, you should buy the silver stocks. In other words, get the leverage on steroids if you're going to make the bet.
So is it just a matter of ignorance on the part of the people that allows this to persist? Because it almost seems like, and you're way ahead of me always, that you've laid out basically the devil's advocate case for why this is a tremendously good idea for the people. And so the 99 point whatever percent versus the career politicians who are, basically a parasite on the rest of us. It seems like if the people understood, it would be good for you to disempower your servants. In fact, you said politicians go into it for power. I hope that there are a few who go into it to serve their common man. And that's, by rights what they should be doing, So is this just simply a matter of lack of education on the part of the common man that permits this to persist?
We could do a whole show on that, but let me try and unpack it. I think that we are coming through a period that has been pretty benign with regards to the world economy, and as a consequence of that, fairly benign to the political class. The period 1982 to 2022 was probably the easiest period known to humankind. The consequence of that is that there was widespread faith in the system that existed. The economic system, the currency system, the government system, the idea that the Fed had your back. This period was marked by low inflation, relatively low levels of nationalism, increased levels of trade, world peace. Did I say declining interest rates? Anyway, I would argue it's over. I would argue that we are in a less gentle period, that will be marked by more volatility. It will be marked by increasing interest rates. It will be marked by more nationalism, more conflict, less trust. And I suspect on a going forward basis that more and more people will come to recognize that the big thinkers of the world don't have their interests at heart. Now, the truth is, for the last 40 years, from an investor's point of view, if you were long U.S. Treasuries and either absent gold or short gold, you did well. So one needs to wonder who's intelligent. Maybe it was them, not me. My suggestion is merely that the benign economic and political climate that we've existed in for the last 40 years is over in some way, shape, or form. I don't know what the future is going to look like. All I can tell you from my own point of view is I am delighted to own bullion. And in fact, I'm delighted to see the bullion, quote, fairly weak, particularly in US dollar terms, which will allow me to add more. It's very difficult for me personally, Dunnigan, to see an excuse for me owning the US 10-year Treasury. I think it's issued by a bad credit. I'm their collateral, and I'm unwilling collateral. And I think it paying me 3.5%, it's now up to almost 3.5%, in a currency where the purchasing power is declining by 8.9% is a really bad deal. The consequence of all that for me is that diverting increasing amounts of my savings, that is the savings that I demand liquidity on, into bullion seems like a very good idea.
In that last part, you talked about the potential better move it would have been to have been invested in treasuries and in the equities, basically in the system, rather than voting against it for the past 40 years. However, in the spirit of follow the money, don't do what they're saying, do what they're doing. Is it not true that for the past 2 years plus that the world's central banks have been acquiring more gold than they had like in the previous 60 years, and then the reclassification of gold as a tier one asset and all that? Are they not, I guess, undeniably in plain view positioning themselves for this next phase that you've just described?
I think that's very true. And whether or not that move is political, I think in some senses it is political. The Russians and the Chinese, as an example, don't want to have an asset class on their books that the U.S. government in capricious fashion could simply cancel. But I also think the arithmetic around the dollar has gotten markedly worse in the last 2 years, which is to say that the product of 40 years of profligacy is beginning to be seen in global markets. So the arithmetic around continuing to own U.S. Long-term paper is beginning to be exposed. There were countries that decided to hold the paper longer than they needed to because a strong U.S. dollar was important to their foreign policy. In other words, it helped them get along with the U.S. And also a strong U.S. currency relative to their domestic currency was good for their export industries. It's just that a circumstance where their savings are yielding them 3% in a currency where their purchasing power is declining by 9%, that policy objective became arithmetically untenable.
You mentioned a few minutes ago your personal proclivity for perhaps speculating a bit in silver versus using gold as a store of value and liquidity. There's a question from Ed B. that touches on that from a different perspective. Should I swap my gold for silver?
Depends on who he is. There's no one-size-fits-all answer. I'm not gonna. The truth is, to be completely honest with you, already made more than enough money to get me through my life. I want to preserve what I have. Gold does that. Earlier in my career, I took several fairly leveraged long silver bets. 3 of them worked out for me, 1 didn't. I regard silver as more a tactical than a strategic commodity. And my gut feeling is if you're going to go down that road, probably rather than buy the silver and accept the volatility in silver, you should buy the silver stocks. In other words, get the leverage on steroids if you're going to make the bet.
Those declining equity prices, though, I mean, we need to talk about that because people are saying we're entering this perhaps long and grinding bull market, and so it can be way too tempting early in such a market to see dips in the context that you might have seen them in the previous 40 years. As you mentioned, we've been through this amazing sort of miracle mile, 40 years of buy the dips and you'll be fine, the Fed's got your back, etc. Do you think people who are ready to jump today into dips in the equities markets may be having normalcy bias that's dominating their thinking rather than really realizing we're in a new era?
I think it depends on who they are and how much work they do. As an example, Warren Buffett has been an extremely aggressive buyer of equities this year, often oil equities. And I would suspect that given the fact that Mr. Buffett sees an imbalance between the reality in energy markets and the way that they're priced, that he'll do extremely well. Might those stocks go lower for a year? Absolutely. Will that cause Mr. Buffett to change his mind as to what to have for breakfast? Absolutely not. Will he be rewarded over 5 years for owning those stocks? Extravagantly. The point of all that is I think it depends on who you are and what you're buying. I don't any longer regard markets. I regard them as facilities for buying and selling pieces of businesses rather than as information in and of itself. The major U.S. equities indexes this year are off by 20%, which suggests to anybody sort of conversant in math that the equity markets are 20% more attractive than they were at the beginning of the year. The GDX, the major gold miners index, is off something by like 30%. The GDXJ is off by something like 38%. You will recall, again, a year ago, my saying that I wasn't finding juniors value in the gold juniors. Now I'm beginning to see some value in the gold juniors. If I see a stock that I think is likely worth $2 and it's selling for $1, I will happily buy it. And if it goes from $1 to 65 cents, I will delightedly buy even more. That's the way I work. I think that I need to have a feeling about value before I care very much about price. If I have a feeling about value, I'm delighted to see prices fall because I'm delighted with bargains. I recognize from reading the comments after our interviews that many people are less patient than I am, less comfortable with volatility, less willing to do work. I've had lots of people say, I wish Rick would shut up and just give us 3 stocks, meaning that people don't want to do the work associated with allocating their own capital. They want the tooth fairy, or in this case, Rick Rule, to sort of hold their hand and obviate their personal responsibility for their own portfolio. But I ain't going to do it.